calm during these circumstances. I need to add, Dave, that as a lawyer, I need to say this, that the advice that we give should not be deemed as legal advice, and it's general advice. We're going to speak as much as we can about specific matters, but people shouldn't rely on this as legal advice, because circumstances of each case does differ, and people need to take individual advice to that effect. That's me. Thanks, Dave.
Fantastic. Thanks, Philip. Of course, that is correct. It is general advice, but we're also going to try to contextualise that as best we can by allowing the chat to go as crazy as people feel comfortable to do so. We really encourage you that this is an open forum and that we're here to answer your questions, and there is nothing such as a bad question in these unprecedented times, because we're all dealing with uncertainty, and that's a very, very real thing. So if I could maybe just get underway, Jerry, yesterday we were talking about the fundamental question that underpins this, and in these times, I think there's validity in, first of all, questioning the viability of the business as the first place to start from. And we've talked a little bit about business models and really having that as the starting point. So I might just throw it to you just to share some thoughts in that to start with. Thanks.
Absolutely, Dave. You're absolutely right. I think the fundamental thing is really looking at your individual circumstances and determining whether the business model as we knew it potentially a month ago or 3 months ago compared to where we are today in this current environment still actually works. Because as you can appreciate, the reality is that things have changed in such a dramatic way that the way we were operating before is no longer valid. And I use the example of whether it's gymnasiums, childcare centres, schools. All of a sudden we have businesses that were previously very successful, all of a sudden get into a situation where they've got zero cash flow. And so they have to make decisions very, very fast, and potentially they need to reinvent themselves. So I think that's fundamentally one of the key things to actually look at. How are you operating your business? What changes do we need to make? And we need to make these changes very quickly in order to be able to survive.
Absolutely. So what's really important about that is recognizing that business models do need to evolve. And, in the past, we've operated our businesses based on the world as we knew it 3 weeks ago, but that's very, very different. But the exciting part about that, Jerry, is it creates an opportunity for people to explore and innovate and be creative. So if we go back to the fundamentals and go, well, why does my business exist? Well, the very first and fundamental reason for that is to meet the needs of our customers. So in this sort of situation, we think about our business model. This is a great opportunity to be thinking about, well, what pains are we here to solve? What gains are our customers looking for? How do we go about delivering what we do? And are there ways that we can use innovative ideas or rethink what we've done to create a better value proposition? And as difficult as this is, if we look at this as an opportunity to change our value proposition, we can end up with a very much sustainable competitive advantage that will well position us to move forward outside of, as this economic crisis sort of reaches the bottom of the curve and we start to move forward out of there. So having a different value proposition is really important, but first of all, asking ourselves the question, well, in all said and done, should I really be continuing on? So today's webinar is about obviously trying to find ways to continue on. So we're going to work on that basis as the underlying cause. And I just wanted to start by talking a little bit about leadership, because in my opinion, it all starts with the quality of the leadership in the organisation. So in these sorts of times, it's very, very challenging for a leader to know what to be saying to their staff. How do I, in fact, engender a sense of purpose and a sense of hope and a sense of optimism when all around me there is doom and gloom, pervading every media channel, and everything is about the hardship and the toughness and all of that, and the constraint that we're operating on. So how do we flip that? Our responsibility as leaders in the community, as leaders in our business, is to recognise that everybody in our circle of influence is dealing with their own sense of fear and uncertainty and anxiety in this situation. So effective leaders in this environment really recognise what it is that their staff are going through, and they're able to tap into that, and they're able to create a sense of optimism, a sense of hope. So how do we do that? Well, we look at things like our vision, and we realign our staff by being more effective in communicating our vision, so that everybody has a sense of, well, what are we doing, why are we doing it, and why is this important? Because none of those things change. Everything changed a couple of weeks ago with this pandemic, but our fundamental reasons for our business and why we do what we do and who we do it for, none of that changed. So this is an opportunity for you as a leader, not only in your business, but in your family and in your community, to step up and flip it and say, you know what, there is an opportunity here. Through the clouds and all the pessimism, there is beautiful shining lights of opportunity. And it's up to us as leaders to recognize those and embrace them and take that as the catalyst to drive our team forward. So I encourage you to communicate frequently. Sorry, Jerry, did you say something then?
Yes, I was going to ask you a very simple question, Dave. I can see that you're very passionate about this.
I am.
And I think it is absolutely vital that we stay positive. But also the other side of that equation is we also need to be very, very realistic. I think you've touched on a couple of really important points, and some of those points you talked about is about from a leadership perspective. I think you were moving to the point of talking about communication, and that is the message that we have to communicate. So I suppose my question to you is, given the area that you've worked in, what are the sort of key areas that you think from a communication perspective should business leaders be actually, what's the message that we should be sending to our team members at this stage?
Yeah, okay, great question, Jerry. So I think the right balance here is recognizing that people do have fears, they do have anxiety, but they're also looking to leaders to give them a sense of hope. So we have to find that right balance between being authentic, being transparent, but also recognizing that we need to choose carefully the words that we use in those conversations. So I'd encourage people to communicate frequently. As soon as something is known to you that's changed, that's an opportunity to communicate. Even if there's nothing that has changed, then that's an opportunity to say, just wanted to let you know, team, that there has been no change. It's business as usual.
Dave, I think that's
perspective. Yes.
I've got to say, Dave, I think that's true, but I think it's important that from a transparency perspective, we need to make sure that the message is clear. And I suppose in this time of uncertainty, often as leaders, we don't necessarily know what those answers are. And I think it's important that we're actually honest to our team members and let them know that sometimes we're not sure where we're going, but to try and effectively let them understand that we are trying to formulate a path in order to see our way through. So I think it comes down to that confidence, even though sometimes we don't know what the answer actually is.
Yeah, absolutely. So I think as leaders, we need to understand that we don't always have all of the answers. And I don't think people reasonably expect us to have all the answers. Okay, and I think that's where open, transparent communication is so valuable, because it's okay to admit a degree of vulnerability or a degree of uncertainty. And to be able to say to your team, guys, I know this is unsure, uncertain times, but as information is made known to me, then I give you my word that I will communicate that effectively to you as quickly and as openly and as transparently as I can. Because recognizing that also the people in our businesses are making decisions for their own lives. And so we have a responsibility to communicate to them in an open and honest way to enable them to respond. So if we paint an overly optimistic picture and they don't make changes in their personal lifestyle and spending habits, then we could be unfairly placing them in a compromised position. And then on the flip side, if we don't give them a sense of optimism, that they'll go home and they take those fears with them. And one of the biggest issues faced by the government right now is the areas of mental health and stress and anxiety. And that's why they're throwing tens of millions of dollars into supporting the telehealth programs and things like that, so that people can actually put their hand up and say, hey, I'm really struggling with this emotionally. I'm the breadwinner. I'm concerned about our family finances. And so as leaders of the business community, we need to understand that our team look to us for confidence around that. So it's really important.
I think, sorry, Dave, just before we move on, I think that's why it's so critical that we talk about leadership, you know, the first topic. You know, if you look at the packages that the government has thrown out there, the government has really said to the business community, I want you to take leadership here. They're putting a lot of trust in the business people to make the right decisions with the tools that they've now been given. And you know, and I think we should really, business owners should really carefully look at how they can be creative about how you just discussed, how they can really change their value proposition that they put, but also how they communicate with their employees. It is a message from the government to say, you know, I trust that the business community will do the right thing, and you know that will get us through. So they do put trust in leadership, and you know that's good that we discussed this first up.
Yeah, absolutely. So I'm just going to pause very briefly there and open up our chat. I'm going to also just put a poll out there for people just to answer a very, very simple question as to whether or not you've got some challenges in the leadership space that you'd like to ask a question of us today, or whether or not you'd like to set extra help around that. So I'm just going to click go on there for a moment. And I really just encourage our audience today, please, this is about you. So jump on the chat, and if you've got a question about what to say, what not to say, when to say it, how to frame it up, please stick it on the chat, because I promise you, if you're thinking about it, there's going to be other people that are on the webinar with us today that are having the same question. Fantastic. It's great to see you all responding. Thank you, everybody. Okay, we're going to move on into our next section of our webinar this afternoon, and that's to get into some of the more meaty subjects around managing our staff resources. And I think this is a very, very complex area, and Philip, we're going to be leaning very heavily on you in this area. But as business owners, we have this challenge where we need to take evasive and remedial action today, because we have so much uncertainty, and many of us have suffered an immediate and very swift downturn in our revenues, and we're looking at our headcount and looking at the cost of maintaining our resources. And of course, one of the biggest challenges we have is how do we position the business so that we have the right resources for what we need to meet the current demands on the business, not stifling the capacity for the business to continue to trade effectively in the weeks and months ahead, and also being in a position to be able to optimize and to spring back into life at the other end. So Philip, what's your thoughts? Maybe we could just start with some discussion around the redundancies and what the options are there.
Yeah, thanks, Dave. I think it's useful to perhaps lay out to people what are the options under the Fair Work Act to manage what we would call a surplus of employees. I mean, the last week or so, I've been inundated with telephone calls from people say, look, I need to let people go. I need to do something. I am bleeding. My overheads cannot go on like this if this is the revenue track that I'm currently on. So what are some of the options? So I'm going to quickly try and explain what the options under the Fair Work Act, what employers can and cannot do. The Fair Work Act does provide a fair amount of tools in the toolkit that you can pull out to help people manage the surplus of their employees. The first, and I'm going to run through them. Some of these tools require agreement from an employee, others don't. So we're going to run through them. First of all is flexible working arrangements. Now, under this heading, one could put provisions that people work from home, for example, and in that case, I would suggest that people have proper policies and procedures in place dealing with their duty of care about people working from home, the equipment they use, the chairs they sit on, etc., etc. But of course, that's not always possible with some work just simply cannot be performed remotely, but that is certainly part of flexible working arrangements. Another big part of flexible working arrangements that can be agreed to with employees, and I suppose this is where communication with employees is so important, is because you do need agreement from these employees to implement some of these things, is a reduction in the hours that they work. You might get an agreement from a full-time employee to work part-time to reduce their hours. But as I said, you need agreement from the employee to that effect to make that happen. I've advised a lot of clients the past few weeks where people have agreed to job share with other employees, especially in the childcare sector where that might be a possibility, industry where that might be a possibility. I also had a client the other day who agreed with his employees to reduce their pay. But of course, people need to be careful about reducing your pay. You cannot agree to a pay rate that is less than the relevant award. Now, as you all know, awards in our country sets the minimum standards of employment and pay rates for employees in certain sectors. Most employees, most type of jobs are covered by an award. There's only a few that are not. So it is important that you review those awards before you agree to reduce somebody's pay to make sure that your new agreement is still above the minimum award. A further aspect that could be used is the use of annual leave. You can get an agreement from your employee to use annual leave. Sometimes employers agree with employees to work part-time and make up their pay, full-time pay with leave. That is certainly something that can be done for both if person has long service leave and annual leave. But that needs to be by agreement. Now, there is a limited opportunity for some employers to direct employees to take leave, but these provisions need to be covered by a relevant award. In other words, the award which covers that employee needs to provide for such provisions, and the award will set out what those requirements are and what can be directed and what not. Or an enterprise agreement, which is a collective agreement, needs to provide for a person to agree to be directed to take leave. In other words, forcibly take the leave.
Look, may I interrupt you for a second?
Yes, go for it. Yes,
suppose I want to try and put a real life example, and I don't want to put you on the spot.
Yeah, go for it.
But a bit like yourself, I've been inundated with dozens of phone calls the last 2 weeks. And I think what we need to be trying to sort of discuss is what are some of those practical things. So you're suggesting that where we are able to have a conversation with our team members and where we can agree that it is in the interests of the business and in the interests of the employees as well, in order to maintain maintain their employment, that we go to a reduced hour type scenario. Which I think makes sense. But interestingly, you said that we need to do this by agreement. So technically, an employer can't simply say, I don't have work, I need you to cut your hours. If an employee says, I'm sorry, I can't accommodate that, does that really literally put you in the position where the only option is essentially for you to let them go? And obviously then we've got potentially, do they become redundant? Are they just terminated? You might sort of talk to that issue, please, Philip.
Yeah, absolutely. They are certainly, if that is what it turns out to be the case, then certainly there are ways that you can terminate employee because of redundancy in these circumstances. But I think there is a little step in between, and this certainly wouldn't apply to every single worker employer out there, but that is the stand down provisions under the Fair Work Act. The stand down provisions under the Fair Work Act says that employer can stand an employee down without pay if there's a stoppage of work in which the employee cannot be usefully be employed. In other words, a good example is Qantas, where the government has shut down the operations. Another example is gyms, or I think beauty salons as well recently was shut down, although they might have been reopened. But the point is, if they are shut down by the government, then certainly one would say that under those circumstances, an employer can stand them down. Now, what stand down means is, of course, that they do not get paid, but they are still employed, and their normal leave continues to accrue. There's one other thing that I should mention, and that is getting an agreement from employee to unpaid leave. And that can be done under certain circumstances, but that also needs agreement. But you're absolutely correct. If your business is not in a position where you can apply the stoppage of work, because I think, and this is important to say, Jerry, the act is quite clear, or the case is quite clear. You cannot stand an employee down. You can't rely on those provisions simply because there's a reduction of revenue or a downturn in the economic circumstances. It needs to be a stoppage of work as a result of something that is reasonably out of the control of the employer. For example, I know of some manufacturers that are purely relying on imports from overseas, and if those supply chains are cut off and they do not get any more goods from overseas, and they physically don't have any work for their employees because of some regulation that prevents those goods to come into the country, that would certainly be grounds for stoppage of work. An interesting thing that I think I should quickly mention, Jerry, where there's really a grey area is in the childcare or school circumstances, where the government on the one hand said the schools are open, but on the other hand says, I don't recommend people to send their kids to school.
So Philip, just in that area, I think if I understand you correctly, there is two distinctions here. There's a direct shutdown where the government has directly said you are an X or a Y and therefore you are not allowed to continue to trade.
Correct.
And then there is the, I guess, the indirect shutdown where the business is being forced into a position where it cannot trade because of something external to them. And I think an example that I heard the other day that seemed to clarify that quite well for me was that if you're a manufacturer of a fireworks, the fireworks itself, you can still make the fireworks, but the government has said that you cannot go to an event, and therefore the fireworks company that could otherwise continue to do what it does and make what it does and sell what it does, but because of an indirect consequence, they're unable to perform. So it's a very shady, not shady, that's not the right word, but certainly grey area between the two.
But if I can make a comment, Dave, so that means in that instance there, that because the fireworks will not be used, hypothetically, the fireworks manufacturer could not stand those employees down. Is that correct, Philip?
No, they're saying that they could, right? Because the business of selling fireworks is directly impacted by the government's decision to ban external public events.
Dave, I think the answer to that is that it's a grey area, to be honest. Right. I mean, we are unprecedented and uncharted waters. There are some people that are certainly saying that that is an arguable position to say, because there cannot be any events. I cannot sell my product. What about caterers, event caterers, that cannot sell their products? Now, I assume they could possibly, do other type of catering at homes and stuff like that. But that's just an example.
Back to the business model, right?
Yeah, that's back to the business model. That's right. But there are certainly, a cafe is a good example, right? So the government has closed down all sit-in cafes. Now, there's argument to say, well, in that case, I can stand down my waitress
staff.
But I can sell takeaways. So that doesn't mean my kitchen staff is necessarily. Okay.
Well, this actually might be a good opportunity maybe for me just to encourage. We have a lot of people online, thank you, which is really good, but every one of you are running a different and unique type of business. So I could maybe just take this opportunity just to encourage you, please ask some questions. The chat's been pretty quiet, so I'm just wondering whether everybody's got complete clarity around that for their business. And if not, please ask some specific questions, and that way we can throw them to Philip and help address some of your personal questions around that. Maybe you've got staff members that are asking you whether or not I should be or could be. Maybe you're considering the resources of the business and thinking, should I make people redundant, or should I wait until there's further advice? Maybe we can cover off, Philip, in the meantime, just while people hopefully formulate some questions just around the JobKeeper provisions and how that's looking at the moment.
Yeah, look, I'm going to ask Jerry to later talk a little bit more about the JobKeeper and how it works and how to qualify for that. But I would say this: it is clear that the government has said whether or not they are stood down or otherwise, employer must pass on those JobKeeper subsidy to the employees. Now, obviously, the idea of the JobKeeper is to keep people in jobs and to make sure that people get money still through this time. So. Especially in the grey areas, it's going to be, there's an argument to say that the JobKeeper would, in certain circumstances, make it less likely that you can stand down people. But it really depends on the circumstances, how much the person earned, what his salary is it more or less than, all of those kind of things. And it does throw an interesting wheel in the spanner.
It does indeed.
Spanner in the wheel, sorry.
In fact, the JobKeeper, you get some anomalies, and as you can appreciate, government is really making policy on the fly, and I think there are some anomalies there that have certainly been brought to my attention. And a good example of an anomaly around the JobKeeper situation is where you may have an apprentice, you may be only a first year or second year apprentice, and he could potentially only be earning $500 a week working full time. Now, the regulations that the government has indicated is you must pass on 100% of the JobKeeper payment. So you end up in a situation where an apprentice that may have been earning $600 a week all of a sudden actually gets a pay boost of $750, and the employer is absolutely obliged to pass that on. They are not allowed to actually retain that. You end up with some other anomalies where, and I had a client actually ask to say, well, I've had people ask me to just stand me down rather than cut my hours, because I'd rather actually stay at home. And I sort of said to the client, well, this is almost becoming like a a bit of a strange situation where government is encouraging people to sit at home, watch Netflix rather than actually working. Now, that's not the intention of the legislation, and that's not the intention of Parliament's idea. It's important you note this is support for the employer. Now, yes, the employees are all well aware, and in fact, there's an obligation for the employer to notify the employee and to register as part of that exercise. But this is really for the employer to try and effectively retain the relationship between the employer and the employee. Statistics have shown that where unemployment effectively increases substantially, it takes a very long time for the economy to actually pick those unemployed people up and use them productively. So the government's trying to get on the front foot in this regard, and hence have provided this massive amount of stimulus that we've never seen before at this particular level in Australia's history. The interesting thing is when you actually think about the exercise, it was only a few days ago we actually saw a lot of TV press and lots of queues at Centrelink. And as you can appreciate, the strategy the government has employed is effectively moved people who were standing in a queue at Centrelink and actually moved them into an employer's office. Because as you can appreciate, there's no longer a requirement. The employer could effectively stand them down or cut down their hours, and it's the employer's obligation to make this $1,500 payment to the employees, obviously given that the cash will flow through from the employer. Okay. So I'll just talk about perhaps some of the criteria around that. So as you can appreciate, I think everyone knows it's $1,500 per fortnight, and this payment will only go on for the next 6 months. So Dave, back to your original point about, I suppose, looking at the business model. If your business model is fundamentally broken, and I'm trying to think of an instance where, let's assume our lockdown, and we're not in 100% lockdown, we're sort of in quasi phases, but let's say, God forbid, we have to shut down completely for a period of 6 months. Now, the government's trying to talk about putting the economy into hibernation. But as you can appreciate, that has a massive impact. So if I can't operate for the next 6 months, am I able to restart my business? And if the answer is no, well, then maybe the right call is to actually close your business down today and walk away. Now, that's a very tough call because, as you identified, this is families, this is livelihood, it's a whole range of things. But I think you need to think outside the square, and you've got to look very closely at what makes your business tick to determine whether it is something that we can actually make it thrive.
Okay, thank you for that, Jerry. Just a couple of questions have come up, which I think would be very helpful for us to explain here. Is that there's ambiguity around what businesses may or may not be eligible for support under the JobKeeper. So particularly the differences from a partnership versus a sole trader versus a company. We certainly had some questions around that. If I could just encourage our participants today, please, just to use the Q&A button. You'll notice down at the bottom of your screen, you have an option to choose Q&A. That's a little bit more helpful for us because it allows those questions to be posted rather than the chat box where there's a lot more activity for us to monitor. So if you wouldn't mind just posting your questions in the Q&A. Sorry, Jerry, could you just answer those differences, those subtleties?
Which particular subtlety, Dave, if you could... You're referring to?
Sole trader versus partnerships and
right.
Whether a sole trader is an individual employee of the company, whether they can get assistance.
No problem. So as you appreciate, a corporation or a discretionary trust, as an example, is a separate legal entity. However, a sole trader and a partnership is not a legal entity. And what does that mean? And perhaps Philip can add a little bit more to this from a legal aspect. But ultimately, as a sole trader, you technically do not employ yourself. Now, one of the concessions in the JobKeeper program is it has specifically a carve out for sole traders, where if you are a sole trader and have an ABN and you do experience a 30% reduction in your income, in your gross income, it's important I identify that. You are eligible for the JobKeeper assistance. And as you can appreciate, part of that assistance package, which applies to all entities, is the requirement to register. And in fact, I heard some stats that close to 500,000 businesses, as of the close of business yesterday, had already applied to register for that. Now, that's a point of differentiation to that of a partnership. Now, a partnership in itself has its own Australian business number, its ABN, but the individual partners typically do not. Now, we have not seen any legislation, nor have we seen any guidance from the government or the ATO in this regard. So I have recommended to clients, where your income has fallen quite substantially, you may want to actually, and where your eligibility criteria is met, you may want to try and register for the job seeker program. So that's effectively what we used to refer to as the unemployment benefit. But as you can appreciate, at this stage, there's no clarity around partnerships, but certainly trading, trusts that trade, and companies certainly are eligible where there's had a 30% reduction in revenue, assuming you're less than $1 billion of turnover.
Okay, so that leads sort of into the next question that somebody's also posted on the chat. The context is a restaurant, and they're basically saying, look, takeaway is not an option for us. We're in the city. There's virtually nobody at work. And they're sort of arguing here that, well, we've stood down staff, and but the simple fact is that we can't operate, and really, should we even be doing that? So I guess the answer to that really lies down into that understanding the purpose behind the JobKeeper initiative is about keeping employees connected with the company and the business. And so the idea, I think the answer to that is that, yes, you should absolutely continue to keep those staff on board and engaged, because if you have to stand them down and they become unemployed, well, their only option there would either to find another job or to go onto the job seeker side of the initiative equation, which is fundamentally the same value. Yeah, thanks, Philip.
I need to clarify that. It's important to say, and I know there's a question about that as well. A person that is stood down is still employed. The person just doesn't get his pay. All leave accrues as per normal. That person can only go and look for another job by agreement with the employer.
Yeah.
So he needs the agreement from the employer. It'd be a bit silly for an employer to say no, to be honest. But so that's the one thing. And if the person is being stood down, you must still pass on, and he was employed on the 1st of March, of course, you must still pass on the subsidy from JobKeeper.
Dave, I might just go back to the point a moment ago you raised in respect of the restaurant. That's a very tough question, and you're absolutely right. The objective is really to try and keep the employee connected with the restaurant or with the business itself. But I think what needs to happen is, as you can appreciate, if you look at a restaurant, and there are multiple businesses that fall into this category, staff may be a large component of your cost, but it's certainly not your only cost. And perhaps the largest cost outside of the staffing in a restaurant type trade, apart from the food, would probably be the rent. And as you can appreciate, we have been waiting for the government to try and provide some additional information in this regard. And at this point, it has been earmarked that we should hear something in the next day or so. In fact, I heard today that they made some additional announcements around childcare and have provided another massive lifeline to the childcare industry literally a couple of hours ago. But at this point in time, there are thousands and thousands of tenants and landlords anticipating that the government will actually come out and provide some additional relief. Because as you can appreciate, if you are in a restaurant type situation where you can't really offer takeaway services, your next biggest cost outside of staff is going to be rent. And as you appreciate, that could potentially cripple the business anyway, and obviously cause it to fail on a permanent basis.
There's a very interesting question on the chat there, Philip, that's been directed to you about do I have an obligation to reinstate somebody? Maybe you could speak to that. Maybe that's a little bit too grey for us today.
No, that's a perfectly good question, because it's all valid. Last week I advised clients to stood down people, and then on Monday night they announced a JobKeeper. Now, the reality is the decision to stand down people should be taken independent of the JobKeeper. There's either a stoppage of work or there isn't. You can't say because, well, now that there's a government subsidy, now all of a sudden there's not a stoppage of work anymore. So it's a grey area. I don't know who asked the question. I can't see it anymore. But the reality is there's no requirement. The act didn't, or the proclamation that came out didn't say anything about that. If we use Qantas as an example, I mean, they're not going to all of a sudden now say to the pilots, come back to work. There's literally no work for the pilots to do. So,
Yeah, I think it's fair to say that the JobKeeper provisions at this point in time are only in play for the next 3 months. And I guess this is an opportunity for businesses, just recognising that there are very real costs associated with redundancy. So at this point in time, if you think about the financial resources of the business and the cash that you might have in the bank account or other ways that you might fund that this provides you an opportunity to put a hiatus period between having to act on making somebody redundant today as a pathway that will require very real dollars to come out of your bank account to satisfy your obligations to pay out annual leave and possibly long service leave and depending on other criteria, maybe age-based redundancy costs and things like that. So this provides the buffer zone for at least a 3-month period for a business to go, well, I'm going to kick that cost down the timeline for at least 3 months. I keep the people engaged with the business. They're still technically employed. They're not on the dole. I can reinstate them if I need to. And then, of course, in 3 months, the government might change the initiatives or extend it, and all of those things will become known to us then. Yeah.
Yeah, there's just one little question that I can quickly answer. Steve asked, we have staff that have been casuals for 11 months. Can we activate them in 1 month's time after they work for 12 months? That's not, Jerry, you need to help me. That's not how I understand how it was written. My understanding is you needed to be, a casual needed to be employed for 12 months at 1 March.
That is, I believe that is correct, unfortunately, Philip. And as you can, I suppose the other challenge there, Steve, I don't know whether they were casuals or whether they were part-timers. And I suppose you probably need to look at the pattern of employment because, as you'd appreciate, we don't have that issue from a part-time perspective. So if we think perhaps laterally, you may be able to do that. But as you can appreciate, it's important that we should state at this stage that none of this has actually passed Parliament yet. It is supposed to happen. So as you can appreciate, we're sort of trying to provide advice based on what we have read and what the Treasury information has been released. But it is important that at this stage, we do identify that none of this has technically passed Parliament. And in fact, as you appreciate, these JobKeeper has now, the rules around this have been in existence for about 2 days. And if I look at the government cash boost that we might touch on a little bit later, they've been around for about a week now. And literally the last 2 days, we've seen the ATO actually come out and provide a whole range of guidance that has effectively restricted substantially the benefits around that. So if it sounds too good to be true, it typically
probably is. I remember Paul Clitheroe saying that very famously on Channel 9 some 15 years ago. If it sounds too good to be true, it probably is. But I think what you're raising there, Jerry, is very valid, is that this is a moving piece and the government obviously is reacting as quickly as it can, recognising that there is a whole Pandora's box of complexity that comes with any of these initiatives. Very easy to say, much more difficult to administer. And I think to the context of that question too, Jerry, that somebody has raised, Bridget has raised a very valid question, and that is about recognising the 30% drop in revenue, which is a criteria for the JobKeeper initiative. How is that measured? Is that based on last month's revenue, the last quarter, or this time versus last year? Could you just put some clarity around that? Because I know we can answer that one.
Well, look, you asked me to put clarity. I don't know if I can put 100% clarity on that. The example that's been provided by Treasury actually talks about a comparison. And they use the example of comparing the month of March 2020 to the month, and they talk about a like period. And so I think the example actually refers to March 2019. So if my revenue was 100,000 in March 2019, and my revenue in the month of March 2020 has fallen by 30%, I would qualify. Now, the interesting thing is there's challenges around certain businesses, and I think of real estate as one that comes to mind, where you can have very, very lumpy revenue. So I think what has happened is they've talked about the commissioner having some discretion about how they calculate this. And as you can appreciate, I've also seen some discussion around if my fall was only 20 to 25%, would that be eligible? So I think there will be some discretion, but again, it's not black and white. I've even seen some instances where we may be looking at potentially quarters rather than months. So it depends on the industry. I suspect we'll get some additional guidance over the ensuing months. Because bear in mind that this is actually started from effectively 1 March, but you can effectively qualify. My understanding is this stage all the way up to June.
Yeah, fantastic. So just to confirm, I'm not sure when this chat post came up, but Sonny was just asking for clarity around the stand down. Just to reiterate that, Sonny, that basically the stand down means is that the company has no meaningful work for the employee, but they do remain employed. Philip, can you just see that comment in the chat there and just confirm if there's anything else to add to that?
No, that I answered that before.
Okay.
That's what I referred to.
Fantastic. Thank you. So also I've got a question here where we have a husband and wife that are partners of the company, and obviously there is a significant reduction in revenue. So just to confirm that both, so long as you're an employed person to the company on the 1st of March, then both individuals, whether they're husband and wife, is an irrelevant point. Jerry, could you just speak to that?
Yeah, that is correct. As long as husband and wife are employed. Now, the interesting thing, I noticed that Darren has referred to the fact that director and wife is director secretary. The interesting thing is, and there's a couple of criteria. One is they will look at whether you're actually operating an enterprise. So,
Right.
and some of that criteria includes, have you lodged a 2019 income tax return? Have you lodged instalment activity statements between the period 1st of July to the 12th of March from memory? So the answer is yes, if you have withheld payments or if you have declared salary and wages, and particularly if you are on the single touch payroll, I believe you'd certainly be eligible for both husband and wife to receive that JobKeeper payment.
Okay, fantastic. So the questions are coming thick and fast at the moment, Jerry, so I'm just trying to sift through some of these. Now, okay, so there's just this question here regarding maternity leave. So we've got a situation where the person has just come off maternity leave and she was casual full-time, and that the employee was advised that they didn't have a position, but she wants to go on job seeker. So what would be, I guess the parameters there would be whether or not she was on the books on the 1st of March. Would that be the right way to look at that question there?
Well, I suppose, Philip, you might be able to answer whether, because I would have thought if you're on maternity leave, it's a form of leave without pay by agreement. So I would have thought you still may be connected to your employer. What's your view on that, Philip?
My view is that we need to carefully consider that, because it's about timing and it's about whether the position was really not available. There's provisions under the Act, the national under the general protections, which says that employer must have a position available for a person and keep a position available for a person that has accessed maternity leave. So I would withhold specific advice on that because it is really very specific, and I would need to consider it more closely. I can't give an answer to that one.
Okay, fantastic. So just in more general terms, Philip, just as I sift through some more of these questions, I just want to make sure that we're answering as many of these as we can. Could I maybe just ask you to talk about some of the broader things? If we've got opportunities for people to work from home, we've got obligations to provide greater flexibility, we've got potential for us to use long service leave and sick leave and all of those things, but there's some prickly bits around some of that. So we don't have no obligations when they work from home from a safety point of view, from a policy. So maybe you could just cover off on some of those while I just sift through some more of these questions.
Yeah, sure. No, I'm just quickly going to deal with that. Obviously, when you require your employees to work from home, it is obviously important that you ensure that you still have a duty of care towards them, that they have a safe workplace. I know a lot of policies require employees to take photos of their workspace, making sure that the desks and the chairs and all these type of things are sufficient, that their computers and equipment are in sufficient order. There's also policies that I'm aware of, and it's probably reasonable for employers to contribute part of payment for internet access, so that the employee is not all reliant on their own internet access. That part payment is at least provided for them. The same with telephone, mobile phones and all that kind of stuff, if the person is required to use the telephone. So I do encourage people to have proper policies in place, because if you require your employees to work from home, then obviously your duty of care extends to home. It does not go away simply because they're in their own house.
Okay, fantastic. Jerry, I think you covered off on this last night, but I just don't have clarity around the answer. But somebody's asked the question around some of the compliance-related issues to be eligible, like having completed the 2019 tax returns and things like that. Could you just provide some clarity around what those little sticking points were?
Is this in particular to the job keeper
Yes, it is.
aspect of things? Okay.
Yep.
So as I discussed earlier, it's $1,500 per fortnight. So the key thing is that an employer must pass that payment on. Some of the criteria is they obviously have to be an Australian citizen, so an Australian resident as well, hold certain permanent visas. And this is really trying to provide, again, some mechanism to make sure that we don't have foreigners that may be trying to take advantage of this. So there are some I suppose, integrity measures around that. The other key thing is in respect of have to have been an employer as at the 1st of March 2020. And the other variable that comes to mind is obviously the reduction. So there's really sort of 4 key points. One is to meet eligibility, 30% reduction. Secondly, need to have been employed. And when I say there's integrity measures, I've had some clients actually approach me and say, "Oh, Jerry, I operated through a discretionary trust and took my income as trust distributions. Can I register for pay-as-you-go withholding and perhaps get this JobKeeper payment?" Now that becomes a real problem because hypothetically they can, but the ATO has already flagged in no uncertain terms that they will be reviewing arrangements where people were not running a proper enterprise or alternatively registered very, very late in the piece. So I would be very wary recommending someone going down that path.
Okay, fantastic. Thanks for explaining that. So in the interest of time, I'm probably just going to wind up the human resource part of our session today in just a couple of minutes, but there's just a few things on the chat that I haven't experienced before. And just a question, somebody's asking around the super, and it'll be great just to clarify that there is opportunity for people to draw down on their super up to, I think, $20,000. But the question is along the lines of, well, what is the long-term financial impact of that decision? And is that really smart to do? So it's a very, very good question. And I think everybody would like to hear the answer to that.
Look, my view is that super should really be the last resort. And it's important, Dave, you used the term that you can access $20,000. The requirement is actually $10,000 before 30 June and $10,000 post 1 July. There are specific criteria. Some of those criteria were that as at the 1st of January 2020, you were made redundant, or your working hours were less than 20%. If you were actually a sole trader, your business has been suspended, or your turnover as a sole trader has reduced by more than 20%. Now, if I put my investment advisor hat on, as you can appreciate, trying to access superannuation now at the time where potentially we've had a significant hit to the value of those underlying assets would not make sense. And I appreciate that there are some very dire circumstances, but my advice at this stage, that would be the last resort to try and access.
Yeah, fantastic. And just a little bit further on the matter of super, what's the position on paying super on the job seeker allowance? Is super still an obligation in addition to that?
There's been a little bit of confusion around that. Technically, you do not pay the job seeker payment, and perhaps the best way to demonstrate this would be by way of example. If I am paying my employee $1,000 a week gross, and the job seeker subsidy is $750, and that employee continues to work for me full time, well, then I'm obliged to pay my 9.5% super on his ordinary time earnings. If, however, I am an apprentice and I earn $500 per week, and the JobKeeper payment actually means that I have to pay $750, it is our understanding that you would only pay the superannuation guarantee on the $500 base wage, so it's not paid on the difference.
Okay, so clearly there is a lot of ambiguity around how some of these things are going to be administered, and lots of open questions that remain unanswered. Certainly from an advisory point of view, that's a challenge for you, Jerry. So I think what I'm going to do is just wind this little section up of our webinar. But just before I do, Philip, do you have any other closing thoughts from a contractual point of view, if we're going to be adjusting people's hours, if we're going to be changing the definition of their role, if we're going to be negotiating different salary packages, what does that mean from a contractual perspective?
Yeah, obviously, Dave, when you enter into those type of agreements with them, you need to make sure that they are in writing. If you get agreement from an employee to use their annual leave, I need to make it clear you either stood down or the person is on annual leave, and the person needs to get agreement if you want to require them to take annual leave. Stood down is an action that's taken by at the direction of the employer, so the employee doesn't have a really big say therein. So the point is, if you reach agreement with the employees about reducing their pay, their hours, taking annual leave, going on unpaid leave, or whatever job share, whatever the arrangements are, I would suggest that you do so properly in writing, in a letter to them, which sets out.
It's just good business, isn't it, to do that?
Correct, and get them to sign that letter.
Yeah, absolutely. Okay, that's great. Look, there's been a whole bunch of questions that we haven't been able to get to, but just very last one, if I can, Jerry, just asking this of you, particularly around the revenue side of the equation. Obviously, the tax office is going to have their sniffer dogs out there looking for people that are trying to rort the system. And the question has been raised as to whether or not the 30% is based on invoices or cash, or, is it? There's obviously a lot of scope for, some, what would you call it? Creative accounting, I guess.
Yeah, look, you're absolutely right, Dave. It's a good point, and it's a good question that's been raised. I suspect the ATO will actually look at the basis of accounting that you have used previously. So if you've been on an accrual basis for X amount of years, I think it would be foolish to try and change the basis of accounting in order to qualify. I would recommend you're probably better off looking at a larger sample period to try and determine whether you could still be eligible given the change in business circumstances.
Okay, fantastic. So I'm just going to close this little section off with a little poll of our attendees. If you could please all just take a moment to answer that. And I also recognise that we have not been able to answer every question, but that does not mean they've not been registered and they're not important to us. And what we will do is we will look at those questions that we haven't had a chance to address directly and respond to those more personally as we move forward. So moving on now to a very, very important subject, and that is around finance. Obviously, the old catchism, cash is king, has never been more true than it is today. And I guess one of the things that businesses are being challenged with right now in understanding their own businesses and understanding the impact of the current downturn is that we have complexity around, well, how do we anticipate what the impact of this will be in my business, in my circumstances, and therefore what level of remediating action do I need to take? And so I think the challenge for business owners is trying to find the right balance between taking appropriate measures at the right time, quickly to the right level, and finding that balance and that tension between underreacting and overreacting. Now, that's really difficult. So that requires some pretty well thought out modelling and some scenario planning and understanding the difference between a budget, which is about how much you might want to spend, versus cash flow, which is when will that actually come out of my bank account or when will it come into my bank account. So there's a whole range of things that I just want to cover off in that area. Jerry, obviously this is key in your relationship with your clients. So maybe you just want to cover off on a few points there for me.
Okay, I think you've hit the nail on the head, Dave, in the key areas of actually looking at a business. So I go back to the initial point you made, and that was about determining whether the business model still works. And assuming that with a few tweaks, the business model works and is sustainable, then the starting point needs to be with what is my current expenditure. And I think you need to look at that in light of what the likely revenue is going to be. And I think, Dave, you might be able to talk to some of the different types of revenue and the importance around different margins that you may have with different product lines and the like. But if I break it down at a very, a high level at this stage, it's about looking at what your actual expenditure is likely to be in the new environment that we're in. And so that would look very closely at what your overhead costs are, and perhaps the largest costs for the majority of businesses are likely to be wages. The second largest cost outside of cost of goods is likely to be rents. And so, as you can appreciate, we talked briefly about the fact that the government has made some noises around this because they do recognise that. They've come out and provided that JobKeeper and some of that cash boost to try and facilitate the wage side of the equation. But ultimately, if you are running a business that I describe as being loose, i.e. we're not really getting good value out of potentially our marketing or our advertising, or we're paying too much for certain overhead expenses, well, that's going to have a big impact. And my belief is that you really need to start from a blank sheet of paper and saying, what are the essential things that I need in order for my business to continue to operate? Once I know what those essential things are, I then need to look at it in light of the types of revenue that I believe I'm going to be able to achieve. And from that budget, I need to work out exactly what potentially break even might be. And then from there, we need to convert that budget into potentially what the cash flow is. And I think, as you described, cash being king is absolutely critical because the timing of those payments, and if you think about the assistance that the ATO has provided or the government has provided at this stage, is really about trying to provide cash flow to business. Because without cash flow, we're in a world of pain, unfortunately.
Yeah,
and then
absolutely.
obviously the next part of that is the resources, which people resources, which Philip has sort of touched upon.
Okay, so just touching a little bit more deeply into the area of cash flow is recognising too that some of the government initiatives, although they've been announced today, there is going to be delays in when they come into the bank account. And so the business needs to really recognise that if they're going to, for example, defer making employees redundant when they really should, obviously there's an immediate cash impost in that situation. But the flip side to that, a coin is waiting until late May or mid-May or whenever it is, early May, I beg your pardon, early May for those cash payments to come in. So there's there is certainly a gap between those two things, and it's a difficult balance that we need to find there.
That's a very good point, Dave. And I think Philip mentioned this earlier. As you can appreciate, if a business makes the decision to let people go and they are more than 15 employees, well, then we are unfortunately caught in the redundancy, potentially in the redundancy regime. And depending on how long they've been with you and their ages and so forth, there are going to be, I suppose, payment obligations that the employer must make.
Okay, so oh, sorry, Jerry, I didn't mean to cut you off. I was just going to say, so if obviously every individual business is going to have some complexity around that as far as calculating long service leave, annual leave entitlements, age of employees, years of service, that's probably an area that I would encourage individuals to reach out to either myself or Jerry to help you with those calculations, because it's very, very important. I talked about at the beginning of the webinar tonight that it's the quality of the decisions that you make will have a significant impact on your capacity to weather out the storm. So we need to think very carefully about what is the value of leaving those essential dollars in the bank account that maybe could be deployed for more value creating opportunities through marketing or sales versus maybe kicking the tire down the bay down the road and delaying the timeline there. Sorry, I got lost in my little analogy there, but really important things. So I just want to touch on some of those things in the context of scenario planning. You mentioned revenue and the fact that individual businesses will have different types of revenue. So I might just unpack that for the benefit of people today, is that when you're trying to consider the scenario in which you might anticipate in 3 months from now or 6 months from now, what we need to be thinking about is the types of revenue that come into your business. So as a rule, as a general rule, most businesses have different revenue sources from different types of customer segments. And so what we need to do is recognize that each one of those customer segments firstly has a different criteria as far as whether or not that spending is discretionary or essential. So if we think about the revenues of your business, if the types of service and products that you offer would be aligned towards discretionary spending, then I'd suggest that you need to be seriously thinking about much more tougher downturn in your revenues, as opposed to a business that would have more essential core costs that people are less likely to give up at a heartbeat. So when you think about evaluating that, I'd encourage you to think about your targets, your target markets and the types of clients that you deal with, putting them into groups and thinking about where they sit on that continuum between entirely discretionary versus entirely essential, and then applying a range of different metrics around that to determine what your future revenue will be over the coming months. That's really important to do because some businesses will have a swift and deep negative downturn. Other people that maybe work on contractual relationships, so examples like builders come to mind, where their clients are 6 to 12 months contractually obligated. So that they might see a downturn in revenue, but it won't happen for 13 months until the existing pipeline of work has come to fruition. So I think, again, just encouraging individual businesses to say that there is not one simple answer to this question. Every single business needs to consider their types of customers and what that looks like. So that's very important. So from a practical point of view, Jerry, you mentioned before the different types of expenses. Can we just maybe cover off on things like inventory? What are some of the things that we can take to immediate remediating action?
I suppose perhaps the key thing is, as you appreciate, we talked about the importance of cash flow. So if we look at inventory, it's perhaps in many businesses they're one of their largest costs, and so the ability of trying to convert that inventory into cash, and what I refer to as the velocity of cash in a business. And this is the ability for us to actually collect our money from our clients or from our customers, and potentially converting what might be stock that's sitting on our shelves into cash. Now, the faster we can do that, obviously the better our position is going to be. And as you appreciate, certain businesses will have different challenges. And I can see one of the questions that actually has come through from Steve is talking about an importer where we might have a significant drop in demand. Do you actually change your business model? Well, as you appreciate, that's a very difficult question to answer, because if we've traditionally been a wholesaler, to move into a retail space can be a world of pain and can obviously disrupt the long-term relationship that you have with those wholesalers. So it's not something not a decision that can be made very, very easily or lightly. And I know, Dave, you've worked with a couple of wholesalers that have moved into that retail space, and there were certainly some pretty drastic, I suppose, ramifications associated with that.
Yes, absolutely. So a dramatic shift, Steve, in your business model needs to be very seriously thought out, because what's interesting about that is that although the product might be the same and the end user might be the same, the way that you take that to market and the costs attracting to administering a larger client base rather than a few wholesale resellers is very, very different to using a model where you're going to provide end customer support. So depending on the nature of the products and how it's distributed and what they look like, obviously that would change the answer to that. But it can be very, very easy to oversimplify the ramifications of making that decision. So, for example, I was working with a large gas and refrigeration business, and they were working on a wholesale distribution type of model where they had half a dozen or so key resellers around the country. They decided to go to a direct to the end user, and they started providing finance to the customer, direct sales support, warranty, all sorts of things. And what they found was that instead of dealing with half a dozen, say, invoices a month, they were now dealing with hundreds of them. Instead of dealing with a handful of support calls, they are now receiving hundreds of them. So all of the infrastructure, all of the support services, all the administrative process, all of the way do we respond to those questions needed to change very, very dramatically. And they, in fact, reversed that decision and went back to their wholesale model. So it's quite a complex question, and it cannot be answered just with a broad brush approach. The other thing that you've talked about in your question here is around currency. And of course, we're in very tumultuous times as far as the Australian dollar and what we're going. And so I think we probably want to be thinking about some risk management in that area of the business to alleviate some of that pain. So knowing what your margins are and thinking about, well, if we were to lock in future contract Aussie dollars or American dollars, depending on what you're buying or importing, that will make a significant difference to your sense of confidence, to your capacity to weather the storm, because a guaranteed set of margin, even though it might be down based on where the Aussie dollar is at the moment, at least you can be confident what that margin is, and therefore you can make appropriate operational plans around that knowledge because you can be confident in that margin. Jerry, do you have anything to add on that particular point?
No, not at this stage, Dave. No.
Okay, thanks. So if I could just maybe throw it to Philip for a moment. We've been talking a lot around the financial side of the business, and the government has introduced a whole range of moratoriums to protect people from a director's responsibility point of view. We've got the opportunity to have increased borrowing without, unlendal support, collateral. So maybe you could just speak to some of those things for us, Philip.
I suppose there's just two things that I mentioned. The one is that the government has put a moratorium on that businesses can trade insolvent. Now, before, you're not allowed to trade insolvent, which would make a director personally liable if a company did trade insolvent. So the government, I think there's a 6 months moratorium on that. So for the next 6 months, companies are allowed to trade even though they are unable to pay their debts as and when they fall due. How that's going to play out is very interesting in the insolvency in a sector. I'm not personally an insolvency lawyer, but I certainly in the corridors of our office have heard things about that. The other thing that they've done, I'm not quite up to speed on the exact details about that, but in the past, if you have a debt due, you could serve what we call a statutory demand on the other company that they must pay the debt within a certain period of time. I think it's 28 days from memory. If they fail to do it within that period, then they would commit what we call an act of insolvency, which would give you grounds to file an application in the Supreme Court for bankruptcy. Now, my understanding is, I don't know the full detail, but that's been extended to 6 months. There's a moratorium on that. So that all makes debt collecting and chasing your debtors a very interesting exercise during this time. It'll be really interesting to see what creativity people will come up with to try and get debt collected.
Those points you raised, Philip, was spot on. It's actually 21 days, and it has been increased to 6 months. My understanding also is they've raised the threshold at which you can actually, before you're actually petitioned to wind a company up. My understanding was previously it was sitting at $5,000, and that has been increased to $20,000. And also, if a creditor wants to take action, that threshold has also been increased to $20,000 if they are looking at trying to put pressure on for payment. So I think Steve's asked a question, where does that leave us? It actually puts us in a very uncomfortable position because, as you appreciate, the media out there at this stage are providing or, I suppose, talking about this. And so most businesses will be thinking, well, there's nothing the landlord can do. There's nothing the supplier can do. I'm just going to stand firm and I'll continue to do this. And I can't be held to be trading whilst insolvent. So I agree with you, Philip. This opens up an absolute brand new can of worms. Now, if you think about it from a government perspective, they've done it for the right reason because the way we are today, it is likely that we could have an instance of potentially 70-80% of businesses being insolvent simply because they would not be in a position to pay their debts as and when they fall due, if we look at the corporations law definition. So we understand why, but this is going to be certainly a feast for insolvency practitioners.
It certainly opens up a whole range of different questions, Jerry, but if we could maybe go back to that very first point, that if the business is fundamentally not viable, then although you have a moratorium and a little bit of security around being able to trade without fear of possible other more formal consequences for those decisions, that it still does not make sense to clock up debts to,
Absolutely.
The knock-on effect of that is enormous from an economy point of view, and we've all experienced that your big corporates take 90 days to pay, and therefore your little guys can't afford to pay the other little guy, and particularly in small business, that's really tough.
It just shows us we're all in the same boat.
That's right. We're all intrinsically connected together. There is one great big mother ship, and that's called the economy. Yes. And we all rely on everybody doing the right thing. So it's a very, very interesting question.
Everybody is somebody's creditor and somebody else's debtor. So we're all in this together. That's the point.
Absolutely. So I just want to pick up on a point that Jerry raised before, and this is around the idea of the velocity of money and cash flow. And I think there's some very practical things, although there is scope for people maybe to, delay payments and have a little bit of a buffer there. It doesn't change the fact that good business practice would dedicate a a certain chunk of your resource to ensuring that you're collecting money as quickly as you possibly can. So what we want to do from a cash flow point of view is we want to maximize the amount of cash that we bring into the business in the shortest possible time. So there's measures that we can use to track that as a performance metric as being essential for the success of the company. And then on the flip side of the relationship as well is to delay as much as you practically can, recognizing that you have key relationships with your suppliers and that you don't want to be part of the problem for somebody else. So finding that right balance between the two is really important. But anything that you can do right now, if you've got projects where you can bring payments forward, I encourage you to do that. If you can look at your trading terms and the types of supply agreements that you have with your customers, try to bring that forward. If you normally operate on 30 days, try to negotiate with your clients to bring that down to 15 days or to 7. When you have a relationship with your supplier, if you're a key partner to that business, then maybe you can be on the front foot there and negotiate more favorable, say, trading terms for you, just to stretch that out to maximize the amount of cash in the bank and to ensure that you are more resilient if you have defaulting customers and all those things, because it's all connected together. So there's a few things around there around break even, Jerry, that we've talked about. Understanding your margins and making sure that there is enough profit in each transaction to cover your overheads in the business. So there's a complexity around that. So in the interest of time, I'm probably going to just wind that up now, unless either of you have something more significant to add in that area. Otherwise, I'm just going to ask a few questions of our audience around that to see if they'd like any extra help, because that's a very personal conversation.
I was just wondering, have we covered the PAYG breaks that we've got, rebates and the tax deferral?
No, we haven't, Jerry. So that would be a good thing. Thank you. Thanks, Philip.
Okay. All right. So I think what Philip specifically is would like me to sort of chat about is in respect of the pay-as-you-go withholding and what we call the boost. And as you can appreciate, this was announced in the initial stimulus package and subsequently was updated. And again, we have received lots of calls about how do I get the $100,000? Now, the $100,000 is not actually a cash check per se. It's actually a credit. And the way it technically works is as follows. And I've actually brought, I might just share my screen, Dave, if I could, just for a moment.
Yes, of course.
I'll bring that up and just see that people can see that. Okay, can you see that, guys?
Not yet.
Should be there.
Just make sure you've selected the right screen, Jerry, if you're running dual monitors.
Yeah, I'm running multiple monitors.
There we go. It's coming up.
Fantastic. All right. All right. So by way of example, as you can appreciate, this applies to monthly and to quarterly pay-as-you-go remitters. So what I've done here is identified a typical client that has some withholding obligations. And you can see up to the end of February, they average about $5,700 per month. So what will happen is when we lodged the March business activity statement, or when the client lodges their instalment activity statement, you'll note that they will include the $5,735. Now the ATO will provide a credit of 3 times the $5,737. And what will happen is that amount will be credited to their integrated account on the 28th of April. So it's not actually a cash payment. And so technically, if you have GST obligations, you will obtain an offset equivalent to $17,000 in this example. So what would then happen is the following pay-as-you-go for the month of April, assuming it's exactly the same amount, you would receive another credit on the integrated account. And you can see that would be hit the account on the 21st of May. Same thing applies for the month of May. And then for the month of June, we have what we call the cash boost. And this is where it gets a little bit complicated. So you'll note that the credit in my example here is actually $14,341. That's actually calculated as being 100% of the pay-as-you-go withholding for the month of June, which is the 5/7, plus it is 25% of the pay-as-you-go withholding that has been credited during the period March through to June. And so what that is essentially, let me just try that again. What essentially it is that. So you can see that amounts to $34,000. That's the total pay-as-you-go from the period 1st of January all the way up to the 30th of June is $34,000 that's been remitted. So the taxman is taking 25% of that $34,000 and is giving it to you as a boost. And so that means the credit for that period actually is $14,000. And that same 25% boost will apply for the period for the month of July. So again, you'll get the actual withholding for the month of July of 5,737 plus that 25% boost to give you 8,605. So that will follow all the way up until the September quarter. So it's important to note, this is actually calculated based on the withholding that occurs for the period 1st of January all the way up to the 30th of June. And in essence, in this scenario here, you'll note that the withholding payment that was $5,735 has actually been technically doubled by the tax office. And these amounts are effectively credited to the integrated account. In the interests of time, I won't run through the quarterly one, but the principle is the same. What you are actually doing is getting a boost, except that the timing of that changes slightly, happens at the end of April, July, and then in October.
Okay, fantastic. So there's obviously some complexity around that, and I'd encourage people just to reach out to Jerry to help understand that if you'd like to really understand the cash impact that'll have on your business. But somebody's posted the question, Jerry, here around timing, and I think that's a valid question. Whether or not there's advantage in lodging earlier, I suggest it makes no difference at all because it's all about credits in your integrated account. Is that right?
Yeah, that's exactly right. So look, I would encourage certainly lodging early is advantageous solely from the point of view of actually understanding your business. So I think you need to know those numbers and the metrics so that you can make informed decision. But ultimately, unless you are due a refund, and the ATO has indicated if your integrated account is in balance, you can request a refund and they will basically put that money into your bank account within 14 days of your request.
Okay, fantastic. Now, Steve has also asked a very valid question around discounting, but Steve, I might just hold that over if you don't mind. We're going to talk a little bit about discounting a little bit later on. So unless we have anything else to add, gentlemen, in the finance area, I might just open up our poll and we will move on into the marketing section. Is that all good with you guys?
Yes, I'm happy with that.
Okay.
Unless there's any other questions that people would like us to try and address.
There are none in the chat line, so I'll just leave that there for another 30 seconds while we do the poll. If anybody has any other questions around the finance area of their business, so that's cash flow, the impact of some of the tax benefits and offsets that we're able to tap into, and of course the legal side for Philip from a director's responsibility point of view. If you have any questions around that, that would be good.
Whilst we're waiting for the poll, Dave, I just might make some observations around some of the other financial benefits that are available that the government has introduced. And that is in respect of some of the bank funding. So they have offered, well, the government has, banks are now offering up to $250,000 worth of loans. Those loans are typically unsecured, and the government is providing support to those financial institutions to help those banks along. So it is important from a cash flow perspective, to try and maximise that. And if you feel that there is going to be a shortfall, or you are going to go through a bit of a cash flow lull, and I suspect most businesses are, it's important that you should be looking at trying to apply for those loans pretty quickly. Okay,
fantastic. Okay, so moving on now into sort of the marketing side of the business. This is where we're really looking to flip it. We've had a lot of heavy detail. Thank you, Philip, for your contribution in all of that. And Jerry, from a tax point of view, there is a lot of detail in that area, and I encourage people just to reach out and get the right advice, because the quality of your decisions will have a significant impact on your business. But just thinking around the marketing now, one of the more common questions that I've been receiving in the last couple of weeks is whether or not I should continue to invest in my marketing and what should I do. And unfortunately, I've been hearing people saying things like, oh, I've just stopped my marketing. Well, the simple fact is that that's a really poor decision, in my opinion. I think in situations like this, we need to recognise that the ability for us to tap into new clients and the need for us to have active marketing is more important than ever. When clients are scarce, I sort of think about it as a river that's going dry because of a drought. The simple fact is that there's still fish in the river, but they congregate in smaller ponds. and it's really important for us to increase our marketing rather than decreasing it. So I'm just curious from our audience point of view whether or not they've got any questions around what they might want to consider as appropriate investments in their marketing at the moment. If you could maybe put some questions into the chat box, that'd be helpful so that we can target our conversation towards your particular needs. But talking in more general terms, obviously one of the questions around social media and investing in AdWords and SEO and traditional forms of marketing, should you be dialing this up at this point in time or should you be turning it down? Well, a simple answer to that, I feel, is that in these times we want to be ramping up our marketing efforts because it's more difficult to find customers and therefore we need to be more visible than ever. But when you think about something like SEO as a method of, I guess, increasing the visibility of your business in the digital realm, that's a long-term investment. That's something that we want to do continually to maintain our rankings in organic search. But one might want to ask the question as to whether or not you should redirect some of that funding towards more core call to action type of marketing activity where somebody is actually incentivized to make a purchase today rather than just investing in future keyword searches. So things like your AdWords campaign, if you're participating in AdWords at the moment, now's a good time to be ramping that up. The cost of leads might change a little bit, but if you understand your numbers and recognize what your cost per lead acquisition is, and then provided it's providing positive margin at the gross margin level, then anything that you can do to increase volume, it allows you to keep people on the books, it allows you to have stock turn, it allows you to move product that is sitting on the shelves that might otherwise go end of life or run out of expiry dates and all sorts of things in those areas. It's all about trying to keep that cash flow moving through the business. So Jerry, Philip, do you have anything else that you want to add in that area?
Dave, I think you are absolutely right. However, I'd probably put one caveat on that, and I think it depends on the nature of the business and what you're actually doing. So I think my personal opinion is that if I'm in a market that is very discretionary, and a good example, I have a cosmetic surgeon that's been a client of mine for many, many years, and their leads have dried up. And in fact, the government has announced that because it's classified as elective surgery, they've actually cut that altogether. So in certain instances, continuing to spend money on ad campaigns may not be appropriate in all instances. So I think, again, your overall arching principle is spot on, but I think you'd need to actually look at the specific industries that you're involved in to ensure that they are relevant to those particular clients that you're trying to attract.
Absolutely. Sorry, Philip, go.
Sorry, Dave. I also, I know it's not directly related to marketing, but I also think it's important that you build those really important clients, the relationship with those clients, especially in a time where it might be a little bit quieter and you have a bit more time to really work on those relationships with important suppliers, but also important clients of yours, to strengthen those relationships in a more network way to ensure that, those relationships remain intact.
Yeah,
absolutely.
That's a really good point, Philip. So we're really talking about, and I'm sure most of our attendees would have heard of the Pareto principle. So it's really about trying to possibly even better service your existing clients. And Dave, I think you've used this term, is adding more value. Because I think the more value you're able to add to a client, the better the relationship is going to be. And even from a transaction perspective, it is likely that if you're providing more value, you may be able to actually increase the dollar value of that sale. So I think it's important that we don't turn the sales and marketing off. On the contrary, we actually think about it perhaps in a slightly different way.
Absolutely. So just to pick up on a few thoughts that you've just both raised there, is that recognizing the importance of understanding your value proposition and who that value proposition is most important to. So if you were to go back to some of the conversation that we had earlier this evening, was recognizing that you have different segments in your client base, that you have different needs that are being met for those individual segments. And when you understand the relationship of what is their driving force in their buying behavior, whether it's an essential spend or a discretionary spend, spend. What that allows you to do is revisit your budget from a marketing point of view and reinvest or redirect some of those funds. So it would be recommending that you don't reduce them, rather you think more carefully about what segments you might target. So that might require a complete change in your marketing. But just to use an example, I have a kitchen client that I'm working with at the moment that has two very distinct market segments, and one is a residential client where it's an entirely discretionary spend, and then they also have their building clients, and it's a lot more of a contractual spend. So, but coming back to the residential spend, we also recognize within that group of clients that they had a continuum, if you like, that at one end it was entirely luxury. So these are the people that just have excess cash and they're not worried about an economic downturn. And for them, being able to just proceed with their plans of renovating their kitchen, for them, it was not a question. So in that luxury end of the market, they've just gone, well, we'll just spend it anyway. At the other end, you've got the people that have a kitchen that, for example, is completely defunct and needs to be replaced. And so they are less likely to adjust. And then there's that bell curve, the big massive people in the bell curve in the middle that are sitting there where it's a largely discretionary spend that could be put off a week or a month or 6 months, depending on their circumstances. So the important thing here in your marketing is understanding where your customers sit on that continuum between essential spend and discretionary spend, and then thinking about, well, what are the driving factors? So the discretionary spend, you might offer incentives to encourage them to buy early or to bring that timeline frame. You have the essential spend where I wouldn't be thinking about making any adjustments at all. And then when you think about your marketing, well, you might change your marketing focus to target those particular areas of the market that are more protected from an economic downturn. So that's really important. Yep. So somebody's raised the question around marketing channels. Well, that's a very, very difficult question to answer without understanding the context of the business. But what you'd be looking at is having a good understanding of the return on your investment in that marketing spend. So if I was to spend $1 on Facebook, will it deliver $5 in sales or 50? Or as Philip said, if you were a relationship-based organization, if you were to invest time in having another follow-up and personal meeting with somebody, what would that likely result in the business? So recognizing that every channel will deliver a different return on investment. And in these times, again, coming back to that point of not reducing your spend, but maybe redirecting it into the parts of your media spend that are less effective. And every business will have a different answer. Some it'll be entirely face-to-face, others will be entirely digital. So, or a combination in between. So understanding and analysing your media spend and your investment into those marketing initiatives, which ones are more likely to deliver the more value for every dollar spent, and then redistributing that to the types of clients that you know that are more immune to an economic downturn like we're dealing with at the moment. So I know that's a complex piece, but there's a lot of elements to it. So also just recognizing that there is additional time if your business has had a downturn as far as being able, needing to produce as much service or product in the past. So seeing this as an opportunity to focus on some of those really important marketing projects. So the things that come to mind in that space is to make sure that your database is up to date. There are people that you've had relationship with in the past. There's people that you've engaged with in the business in the past that may have not made a purchase. There are people that you have not done business with for a long period of time, but they're still out there. So this is a great opportunity for you just to rethink what your marketing, your best pathway to market is, and thinking about things like automated marketing, lead nurturing, thinking about your social media being present and visible. There might be less people buying, but there's still people buying, so you need to be in front of more people. So weighing all of those things up together and thinking about your database and who should I be reaching out to. And that's all about, again, just maximizing the likely return on any investment, whether it's dollars or time. There's a cost to both of those.
Dave, if I could ask you a question, what's your view is the most effective, cost-effective form of marketing, Dave? Because my thinking is that for many businesses, sometimes it can be around relationships. And again, it depends on the nature of the business, but sometimes it's about obviously building that rapport. But from your experience in helping clients market and differentiate their business and identifying their value proposition, what typically do you see is the most effective form of marketing?
Loaded question.
I don't know that I can answer that one entirely, Jerry.
Sorry, I'm asking you a question because I'm curious.
Well, listen, obviously we're working in a very digital world, and what I would be saying is that the things like your website as a source of information can be very, very cost effective. Thinking about, okay, so what we talk about in this context is the buyer journey. So a person needs to start with the recognition of a need, and we need to take them all the way through the journey of finding information, considering alternatives, understanding what their options are, maybe getting further information, then reducing it into a consideration set of 2 or 3 companies, and then what will be the final point that I make a decision, and then how do I engage the company, how easy it is. So there's this entire spectrum of things that culminate together into effective marketing. So it's a lot more complicated than just who is my customer and what do I want to promote in front of them. When we think about marketing, it's a much bigger piece than most people really understand. Marketing is every single touch point that a customer has with an organization. So we can be looking at how quickly do we answer the phone? How quickly do we respond to sales leads? What is the quality of the information that we provide? How accessible is that information if people are using our website? When we think about all of those ways that we interact with a customer, it could be as simple as the accounts department following up on an invoice and inquiry, or processing a refund, or all sorts of things. So they're all elements of marketing, and there's in fact a whole range of things. It includes your price, it includes how you promote, it includes the quality of your staff, it includes the types of products that you offer, which may change based on season or timing, all of those things. So we want to look at the marketing mix as a complex combination of all of these different factors, and each one of them in every single difference will have a different period of waiting. Yes, Philip.
Yeah, so Dave, that just makes me think, how does your sales strategy fit in with that?
Yes, well, it's all interacted together, right? So the age-old argument, the fight between the sales department and the marketing department, is the sales guys are always saying, you're not giving me good quality leads or not enough, and the marketing guys are saying, you're not doing enough with the good quality leads that we give you. So they're intrinsically connected. And so I think what's really interesting about that is that marketing has a responsibility to deliver appropriate people to the business as far as opportunity, and then the sales side of the business are the ones that convert those potentials into new business. So to just come back very quickly to Jerry's earlier question there about marketing, for example, I have one client at the moment that is entirely online, and they are seeing at the moment around a $22 return on every single dollar they spend on Facebook and their digital platforms. So they're getting a 22 times return per dollar spent. Okay.
That's pretty
so
impressive.
Yeah, and so I have other clients that say, oh, social media, Google AdWords is a waste of time. The simple answer to that is that every single business has a different pathway to market. So if it's a relationship business, then cultivate relationships. If it's a business where there's a long buying period where people like to be informed before they make a decision, then think about the information that they need to make that buying decision. Think about the journey they go through, right? Think about your website and how you deliver that information. There's all sorts of elements that come into that play, because what we need to understand is that the more effectively we can communicate and communicate our value relative to our competitors, the more likely somebody is going to engage with us. So coming back to the point I was making before about this journey that people go on, recognize that there is a conversion rate that happens at each stage. If someone was to Google accountants in Parramatta or law firms in Parramatta, there might be 1,000 searches. Okay. And then out of those 1,000 searches, how many of them end up engaging with your platform? So there's a conversion rate. Now they're on your platform, how many of them will engage with the information available? There's a conversion rate. Now that they've got information, how many of them will reach out and say, I actually need to have a conversation? There's a conversion rate. You've now had a meeting and you've given them a proposal. There's a conversion. You've now given them a proposal. You now need to close the deal. There's a conversion. You've now done the first stage of business. There's an opportunity to resell and upsell and continue to provide service. There's a conversion. Okay, so what we want to do in marketing is recognize every single one of those stages and go, how do I optimize, or out of all of those stages that a prospective client goes through, out of each one of those points, where do we lose the most people? Where are we the least effective, right? Because there is only a finite number of pool of people that are inquiring and looking for whatever it is that we buy, that we sell or do at any given point in time. So our job as marketing is to look at that and go, well, how do we maximize the potential that we can extract out of that finite pool? Okay. So it's a very, very complex piece. And so when you think about the advertising spend, you go, well, I could invest 4 hours of face-to-face cold calling time. What will that deliver? Or I could spend $1,000 on Facebook. What would that deliver? Now, if you don't know the answers to that, then you need to think about your measurement system so that you can calculate that and make more informed decisions about your marketing. So then coming to the last piece of the journey, which is the sales process, Philip, which is what you were just talking about, things like discounting strategies and, how do we convert the sale? What is our sales process? How easy is it for people to transact with our business? You want to look at any way that you can to reduce the friction between I'd like to buy and allowing them to buy. Right, so many people get this stuff wrong. They put all of these barriers up in between a decision that somebody wants to buy and actually making it easy for them. So think about your channels. Think about your path to market. Think about your payment systems. Think about your communication. Think about how easy it is to fill out the form. All of those things add friction that allows people to go, you know what, this is just too hard.
Yeah, absolutely.
It's too hard. I'm going to go somewhere else.
Yeah.
Right. So you need to think about that. So that's in the sales context. Also thinking, Steve asked a very valid question around discounting and all of those things. And of course, that's a very difficult question to answer. Steve has used some specific percentages. And I guess the answer to that lies in, well, relative to what? Because what we need to understand is that 5% off the top, if you only work on a 5% gross margin, is in fact 100% of your gross profit. So we need to look at it in dollars terms, not just percentage terms. And then we need to look at that in relationship to the volume that we can sell at a certain price. Because this is one of the age-old things. If you look at the cost of discounting, if you reduce your margin, say, if you offer a 20% discount and you work on a 40% gross profit, then you've eliminated 50% of your GP, which means you need to produce twice as many sales to get the same dollar contribution to cover your overhead. Yeah. So this is a complex relationship, and we're starting to get into some economics here where we look at supply and demand, and that basically says at any given price there will be X demand for that product or service. So what we need to try to find is that balance between, if I sell at $1, I'll sell 10. If I sell at 90 cents, will I sell $1.11? Because if I'm selling, 108 rather than 111, because if you're selling only 108, you're actually worse off than selling less product at $1. I know that's a little bit complex, and I wish I could just throw it up on a spreadsheet and explain that to people, but there is a relationship between the two. And if you think about the whole supply and demand curve, if you think about that in the context of tax, right, that's what the government does. They know that if they put the price of a train fare up from $6 to $7, you're not going to resign from your job. Right, so they know they can push that price up by $1 and demand will not change. If they put it from $6 to 60, then yeah, that's going to impact demand. So if you use the simple analogy of a glass of water, that if one glass of water is the same as that glass of water, well, why would I spend even $1 or 1 cent more for that glass of water? Demand would disappear. So every single product, every single service will have a different relationship it's what we call the elasticity of price and demand, which means for every percentage change in price, what will be the percentage change in demand and what is the sweet spot between the two. And then that needs to be interrelated with the capacity of the company and what can the company deliver, because if you get infinite demand, you can't supply, and therefore price needs to change, right? So I don't want to overcomplicate it, but that's some of the curveballs around what you've just asked. So I would suggest discounting is not a strategy that you want to embark in, Steve. I know you've got some heavy players. They might have deeper pockets than you. So you need to understand your own cost structures, and you need to make decisions around your own cost structure that says, if I go below this point from a discount point of view to attract volume, A, can I supply? And B, can I cover my overheads based on the volume that I'm going to get? That's where the answer to your question lies. Not an easy one.
Thanks for that analysis, Dave. Lots of issues in there, and you brought back nightmares of my economics classes many decades ago.
Sorry. What I would say, if you'd like to have that conversation, it's a very contextualized one. So reach out to Jerry or myself, and we can do some more detailed analysis around, that impact of pricing in your business.
Very good.
Yeah. Okay, fantastic. Well, do we have any questions around the sales and the marketing side of things? Or Philip, Jerry, do you have anything else to add?
No, I don't at this stage, Dave, to be honest. That's predominantly your domain. But I think you've covered that very succinctly. I'm just having a look at some other questions. Okay, I don't know if we can actually answer this. There's a question targeted to yourself, Dave.
Oh, okay.
Dave, understand what you're saying about marketing. However, in this climate, people will shop around and try to get the best price. To get the price down, you have to have the strength to hold your price where you have a decent margin, and to not do the sale if the margin is too low and not profitable. Time is money, and some people waste your time and your experience. Over 33 years, he's been obviously in the sales game.
Yeah, absolutely. So that's a very, very valid perspective. And the simple fact is that people will always be shopping around. And today is no different to that a few weeks ago. However, people might be more prepared to shop around in the hunt for a bargain. And that's where every single business needs to understand their own margins. See, when people say, I've set my price, and I say, well, how did you do that? And say, well, I did some research and I found out that that's what they charge. Well, that's actually potentially the pathway to the same end result that they're going to, which could be failure. Okay, so you need to look at your own costs. You need to look at your overheads and go, how do I minimize the overhead to the lowest possible area to the lowest possible cost that I can? And when you maximize your efficiency in how you deliver what you do at the cost that you deliver it for, allows you more scope to discount. So that's what we call a cost differentiation strategy. Okay, so what that means is that if you can reduce your overhead and your cost of producing the product, you can either offer the same value or the same product or the same service at the price of your competitors and be more profitable, or you can offer the same product at a discounted price and be more competitively advantaged and still be profitable because you have lower overheads in the business. So there's a whole range of strategies around that. That's quite a complex area, but that's sort of what you're talking about. So great question.
Okay.
Yes. Okay.
Right.
So discounting for companies trying to clear inventory, that's a really good question as well. What I'd be looking at in that area is managing your stock more effectively. So look at the stock that you have a fast turnaround on and sell more of that, promote more of that, adjust your marketing towards the product that you can move quickly, and use discounting at this point in time in the low value or the slow turnaround product just to get that cash into the business, because the cash in your bank account, you can redeploy it. So it's better sometimes to sell some product that you're not going to move either at cost or below cost, because you get the cash into the business and then you can use that cash to reinvest it into other marketing initiatives that will produce better margin.
I agree with that, Dave. And I suppose the other thing you can add to that is you might be able to start packaging or bundling services or products together in order to effectively try and clear potentially some of that stock. Even if you're not getting full margin on it, you're at least turning it over and converting it into cash.
Absolutely. So that's that velocity of cash that you're talking about, Jerry. It's about keeping the cash moving through the business. And I think what's particularly important about what you've just described is how every single business will have a different combination of those factors. And there's no simple answer across all of those things, but it's about having the product in your business that is the most appealing, that you can sell most readily, and hopefully do that at a point of differentiation. So this is where differentiation is very, very important. The more different you can be from your competitors, the more likelihood is that somebody will choose you over somebody else. And you cannot do that by price alone. I guarantee you that if you are only being different on price, you are going to fail. Okay, I know they're harsh words, but that is the truth. That is a spiral to financial ruin when you are only differentiating your product or service on price.
That's because obviously there will always be somebody that will be able to do it faster, cheaper. Will find that cost differentiation. So that's not a game that anybody wants to play.
Yep, I'd strongly be advising in this sort of climate, protect your margins, protect your value, and scale down your business to protect your profit, because you are better off having a smaller profitable business than a larger non-profitable business.
Right, so Dave and Jerry, who's willing to look into the crystal ball? So many said it's now a lifetime investment opportunity.
I was actually going to make a comment about that as I was typing that, Philip. So look, is it a lifetime opportunity? I think one needs to be very, very brave to go against the herd, because invariably you're going to get hurt. And I think the likes of Warren Buffett, when we talk about investment, talks about looking for companies that have good business models, that are sustainable, that have low levels of debt, that have competitive advantages, that are well managed, that you can buy cheap. And if you're able to do that, then absolutely, it's an opportunity. And whilst that price may fall even further, it does provide a good buying opportunity. But you may have heard the saying, if you're trying to catch a knife, you're bound to get bloody. And if the market is falling, you're bound to get never pick the bottom of the market. So yes, you can, but be very careful.
Yeah, absolutely. So the whole area of marketing and sales is complex. There's a lot of interaction in between those things. So I encourage people just to dive in and consider their own unique situation in their business. Please answer our poll if you can. I'm recognizing, Jerry and Philip, that we're getting close to our allocated time. So we'll look to wind things up. But if anybody has any questions, I would encourage you please just to put them on the chat now, because we will be finishing up very shortly. Just to sum up, everybody, we recognize that it is difficult. It is tough out there. We are having to make complex and difficult decisions. But as I've said repeatedly throughout our webinar tonight, the quality of your decisions will make a huge impact on how you come out of this. So there's tough times ahead, but for the people that make sound decisions, batten down the hatches, are on the front foot about that, and don't delay through fear. You're better off to make a decision and realize that it's not the best one and modify it than making no decision at all often. I think that's absolutely. I think that's a fair principle to operate on. That doing nothing is in fact a decision. And so in these uncertain times, I just encourage you just to reach out to the people around you. Be very, very careful about who you take advice from. Okay, don't take advice from the water cooler. Don't take the opinion of the person next door. Don't ask your brother or sister if they've got no experience in running good business. They don't know. Okay, reach out to the professionals in your network. Reach out to Philip, reach out to myself or Jerry, and tap into the people that can give you a different perspective. Because one thing that Jerry and I and Philip see over and over and over is people that regret their decisions because they failed to get the good advice at the front. They make the bad decision, and then they have costly advice at the end trying to undo the bad choices that they make.
Yeah, very true.
Yeah, and so we have finite resources. You cannot afford to waste them on marketing things ineffectually, on making the wrong decisions with your staffing, on making poor decisions from a contractual point of view, not understanding what your tax obligations are, not understanding what the opportunities and the benefits are for us to take advantage of. So reach out and get that information, because you will make much better decisions as a result of it. Okay, so we've got a couple of last questions that have popped up. Jerry, there's one for you.
If people have the means, is now the time to buy property and retire? Really good question, Tanya. My view is that, look, I read an article yesterday indicated that we've had about 13% increase in real estate in the Sydney market. And as you can appreciate, as unemployment unfortunately ramps up, it does mean that we are likely to see real estate prices fall. So I probably would keep my powder dry for a little while. But as you can appreciate, when it comes to your main residence or something like that, it's all about making sure that whether again, I don't know that you're going to pick the bottom of the market, but I'd probably wait a little while at this stage.
All right, I suppose from my point of view, if I can make some closing remarks, Dave, if we are there already.
Yes, thank you.
From my point of view, I would say it's important to communicate effectively with your employees, be transparent. We spoke about that before. The second thing is something that you've touched upon, Dave, is to really seek help. There's a lot of people there that are willing to help in these times and willing to provide advice, but as you say, you need to get the right advice. And then finally, once you've made your decisions, I think it's important that you stand firm on those decisions. It's not going to be easy decisions. You don't want to have half-baked decisions either. So if you are confident that you've communicated correctly, you've sought the right advice, and you make the decision, it's important that you stand firm and put them through, and and hope and trust that advice will get you through this time. So that's the comments for me.
Absolutely. Very, very sage advice, Philip. Thank you so much for sharing that. It's been a fantastic webinar. I'm so grateful for everybody and their contribution, because it's in the contextualization of individual circumstances that has allowed us to tailor what we could have talked about, because Philip and Jerry, I know, have been talking non-stop to their clients for the last month. So that probably amounts to maybe 200 hours of, not to mention the internal dialogue that's been going on in our heads in the middle of the night, and all sorts of crazy stuff there. So I've just put a poll up there for sales. If everybody wouldn't mind just answering that, that would be terrific.
Dave, I'd like to make just a couple of quick comments
yes, of course.
in closing. So I think the key takeout for all of those attending is review the business model. Obviously, budgets, cash flow, resources, people, you've got to look at that. Make sensible, logical decisions. Think through the consequences of those decisions, because they are decisions that we're going to have to live with. And so you want to get good advice around those. My other point I'd like to make is make the tough decisions sooner. Obviously, the government is doing a lot to try and support us, but sometimes what the government may do may not be right for you or for your individual circumstances, because unfortunately the business model is broken. So, and my last point I'd like to make, Dave, there are going to be thousands of opportunities out there. So out of this, we will eventually see daylight, and it is those businesses that have set themselves up for the success and for the future that will be able to soar in the future once we get out of it.
Yeah, absolutely fantastic. You're so right. And when we set up the agenda for tonight, we wanted to cover off on those 5 key areas: the leadership, human resource, finance, marketing, and sales. I believe we've done that. But overarching all of that was that desire to have people feeling more confident about where we're going. Now, confidence and fear, they're an interesting thing. On one side, you have fear, which is often driven by a lack of understanding and a lack of knowledge. And I hope that after our session tonight, that everybody feels like they're a little bit more informed about what their options are. And I hope that we've provided some insight around some of the important operational decisions that you're facing. I'd like to just open up our final poll, if you can, Philip and Jerry. And myself particularly, sorry, not myself particularly, but Philip, Jerry and myself, we have put a lot of time into trying to prepare tonight, but we know that we could do better. So I'd like to encourage you, please, just to provide us some honest and open feedback. We're all professional people. We've got tough leather skins, so you please be honest. I'm going to just hit that poll now, and just as we consider our final thoughts, that there is rays of sunlight coming through the clouds. There is opportunity, there is hardship, but I tell you what, if I know nothing about business, and that is that in time of hardship, it forces us to go back to the fundamentals. We want to think about our customers and what value we provide for them, because without customers and without value, we have nothing. So I encourage you just to think about how it is that you change people's lives in your business. And it could be as simple as picking up their rubbish. I tell you what, I love that movie. I don't know if you've ever seen it. It's back in the 60s with Jack Lemmon, and it's set in New York when they had the great big garbage strikes. And the entire scene of this movie is set around Madison Avenue when there was mountains of rubbish. And the simple point I'm trying to make is that it doesn't matter what you offer. If you cannot determine how you are providing value, then you need to go back to the drawing board, right? Because there are so many things that we need, and the simplest of things are about creating value for people's lives. It's really important. So get back to the basics. Think about the projects. Think about the things that you could be investing your time in today that will make your business more resilient and better positioned, so that when we come out of this economic downturn, that you'll be in a position to leverage that and go forth and multiply in a position of strength. Think about every single dollar in your war chest in the bank account now and protect it. Think about that as your army that will allow you to weather the storm. Think very carefully about what you spend your money on. As Jerry has just described, take the tough decisions and do that with confidence, because they're the decisions that will see us all through this storm. Reach out to the people around you. There are people in your network that can provide you with advice and guidance. Don't be embarrassed to ask. There's no such thing as a bad question in this, but we're all in this together, everybody. Small business is the backbone of our economy. It's the backbone of our community as far as providing livelihoods. So I encourage you just to batten down the hatches, be strong, and we're all going to come out of this just fine. So in closing, thank you so much, everybody, for your contributions tonight. Jerry, Philip, do you have any last thoughts before we wind it up?
No, I'd like to say thank you, Dave, for mediating this,
That's a pleasure.
thank you.
Good fun.
Thank you for the for the audience for giving us your 2 hours of time, and appreciate any feedback, good, bad, or indifferent.
Yeah, same here, Dave. Thank you for you and the C-Suite Advantage, everybody there for organising this and arranging this. Jerry, thank you for your input, and everybody that was part of it. Great to be here. Thanks.
Thank you
Stay
very
well
much.
and stay safe.
Yeah, absolutely. Well, good night, everybody. Please just click on the poll now. If you could just spend another 5 seconds just answering that, that would be really helpful because it'll allow us to improve what we do next time. Much appreciated. Otherwise, you've got Jerry's contact information, Philip's contact information, and of course myself. We'd be happy to take any further questions offline if we didn't get to them tonight. I hope we covered everything. Otherwise, all the best for the coming weeks and months ahead, and we'll look forward to being in touch with you all again soon.
Thank you.
Thanks, everybody. Good night.